so as you can see, this is USD JPY, I mean UJ, and today I'll be using the 15-minute time frame as my higher time frame. On our previous top-down analysis example, I used the 1 hour as my higher time frame, meaning I executed on the 5-minute, just like you all saw on that video. And in today's session, I'll be using the 15-minute. And of course, I said if you're using the 15-minute, then you should be looking forward for the lower time frame to be somewhere between the 1 minute and the 5-minute. I usually recommend the 3-minute, and that's the one that I'll be using in today's session. All right, so just like as usual, we first make sure that we mark the current trading range, we mark the POIs, and until price interacts with that POI, will we now dive into our lower time frame. We just don't we don't shift into the lower time frame before price interacts with a key area or sweeps or interacts with the liquidity level on higher time frame. Right, so exactly right here, we can clearly see, let me just use the brush. You can clearly see here, price has taken out the inducement, then made a break of structure to the downside. This makes this one here to be, this one to be a minor inducement. You can clearly see that I cannot use this one here to be the minor inducement because the whole order flow starts from this low all the way to that high. So this means our high of the order flow is what we'll be calling the major inducement, the minor inducement, because it occurred before this break of structure. You can clearly see that this low didn't broke past this swing point. This means this is a minor inducement, and if you clearly remember, I said that if the trading range involves a minor inducement, this says that the external liquidity is our major inducement, and we can clearly see that this here is the external liquidity and that's the major inducement. And I said that a sweep past the major inducement does not make a change of character, rather it just makes we just consider that as a sweep of the inducement and a continuation of the prevailing trend. So I cannot say this one here to be a change of character, but rather this is just a major inducement sweep, and I'll be waiting for a break past our swing point, and we can clearly see that we got the break exactly right here, and this means that our bias is still bearish. Right, so then here comes our new trading range from that high and currently ending here. Even though price has yet taken the inducement, of course I say the low is here, but that's not the same point low, but until price takes out either the minor inducement or the major inducement. All right, so let me get into the current trading range. Let me get rid of this circle, and we can clearly see that our trading range high, like I have noted, it started from that high and currently ending here. So we all know the first step or the next step after identifying your trading range is obviously identifying your inducement. In that case, it doesn't matter. It can be a minor inducement or a major inducement. Alright, so in our case right here, we can clearly see that our minor inducement is, alright, this here is not a minor inducement. The reason as to why that's not a minor inducement is because that's not a valid pullback. You can clearly see that this one here is an invalid pullback, and the valid pullback is this one here. So like I said, in true SMC, we usually ignore the invalid pullbacks and only consider valid pullbacks. So this explains why I'll be choosing this one here to be the minor inducement rather than this one here. Right, so we can clearly see that if I take, alright, let me change the color of my line to a good green, so that now I can draw this line and see if that was a minor inducement or it was a major inducement. And we can clearly see that if I start the line drawing from that end all the way to this end, you can clearly see that this low didn't broke past our swing point. So this means that this pullback was created before price broke the structure to the downside. So this means that this inducement is a minor inducement, then therefore concludes that this high or this external liquidity, that buy side liquidity, resting above that trading range high, will now be the major inducement. Right now, let me continue running price because we said we don't mark the POIs, or we don't tie ourselves marking the POIs if price has yet taken the inducement. Right, so let me continue running price. Let me make price. Right, so let's see. Right, so price is retracing, and all right, exactly right here you can clearly see that price created an inducement. I mean created another valid pullback. You can clearly see that this is a break, so this means that the pullback high will now be our major inducement, and this one here will just be now a random buy side liquidity. I mean the liquidity resting above there, it will be just a random buy side liquidity, because we say the inducement is the buy side liquidity from the first valid pullback, and this here is the actually not the first, but it actually depends the direction of we saying the first, but I think the good word or the right word to use is recent. So on the recent trading range, I mean the recent valid pullback, the buy side liquidity, that's the inducement, and this one here, this is just a random buy side liquidity, so I'll get rid of that, or let me just leave it, maybe it will mean something later. Alright, so exactly right here, this does not give me any picture of me confirming this one here as a valid swing point. I said we need to make sure that price has taken out the inducement. In that case, it doesn't matter if it's minor or major as long as it's an inducement. So I'll continue running price. And exactly right here, you can clearly see, all right, so price here created another valid pullback. So this means that I will be shifting to, all right, I can even see another valid pullback below here. So initially it was this one, but then price created another one here. So yeah, so that's our valid pullback exactly right here. Maybe I can zoom in if you guys don't see. You can clearly see that this wicked above or took out the liquidity resting above the previous candle high, and we say that's what confirms a valid pullback in a bearish scenario. And yeah, of course I said we need to make sure that the inducement is taken out. So let me continue running, and exactly right there, that's what we were waiting for. We can clearly see that the major inducement is taken out, and this is the moment now to mark our POIs. And all right, so first let me do this. Let me mark my right. So let me mark my yeah, my trading range low, because the inducement is taken out. So we start from this high all the way to this low. That's our trading range. So our trading range starts from that high all the way to this low. So exactly right there. Maybe I can do this so that I can get the levels, but this is not necessary. I mean, it's not a must for you to actually do this. So let me get the levels. Yeah, so you can see, yeah, exactly right here. All right, so that's not important. What's important is marking the POIs right now. All right, so we said that on marking POIs, if you do remember, I said that when marking the POIs, we usually start with the order flows, because the order flows are primary and the order blocks are secondary. So at my trading range, or in our trading range, we can clearly see that our extreme order flow was this one here. So that was the extreme order flow, and you can clearly see that this valid pullback mitigated the order flow. And yeah, it was just a mitigation by a week, but even the smallest tiny things do matter. The mitigation by weeks are valid mitigations as long as that week was from a valid pullback. And coming now onto the next order flow, and see if this order flow is also mitigated. And we can clearly see that this order flow is also mitigated by, all right, this is very important. Is it this one here, or is it this one here? We said a valid mitigation is by a valid pullback, and this one here is not a valid pullback. So this means that this order flow was not mitigated here, but rather it was mitigated at this end. So this one here was the valid mitigation on that order flow. So this means then that order flow is mitigated and therefore invalid. So right now I'll be shifting to the next order flow. exactly right here, we can clearly see this is the order flow. If you was to refine this order flow, then you can refine it to this end, but you need to keep in mind that the correct order flow is not that one. So if you was to refine that order flow, you would have refined it there, of which even the refined one is mitigated also. So but the correct order flow needs to be the whole buying move starting from this end all the way to that high. And you can clearly see this value pullback mitigated that order flow. And obviously coming to the next order flow, which now is our last on this in this trading range, we can also see it's mitigated by this valid pullback that created our major inducement. So this clearly shows that in our trading range there is no order flows, and we are only left with the secondary option, of which is the order blocks. So this now says that I will need to delete all of these zones, so that now I can keep my chart clean, so that we can now mark our order blocks. Right, so starting from the extreme, just like it, yeah, starting from the extreme, I clearly showcase the criteria of identifying a valid order block. So if I start from this value, I mean this bullish candle on the extreme of our trading range, we can clearly see that this bullish candle took out the liquidity of this previous bullish candle. I mean the previous candle high. This bullish candle took out the previous candle high, but we can clearly see it's not associated with a fair value gap. But I said, if you do remember, I said that we usually shift to the next candle that is associated with a fair value gap. And if I shift to this next candle, we can clearly see that this candle is associated with a fair value gap. Let me just leave the color to red. So you can clearly see, yeah, that is the candle, and it is associated with the fair value gap. I said the narrowness or the size of the fair value gap does not matter. And also, even if the fair value gap is mitigated, as long as it's not fully mitigated, this means there is still some imbalance that is left. That order flow still counts to be, I mean, that order block still counts to be valid. Right, so going here until this down here, that's where now we get another liquidity sweep, exactly right here of this red candle. So that sweep and the candle that took out that previous candle high is this one here, but we can clearly see it's mitigated by this candle, and also the fair value gap associated with it, it's fully mitigated. So this means that this order block is not valid. Right, so that makes me to go further and further, and right now I can clearly see this order block here. This is the other order block, and this order block is also mitigated exactly right here. We can clearly see the order block is also mitigated, and this makes me now shift into this order block, of which I don't know if price has taken out the high of the, all right, let me get rid of this one because this one is already mitigated, so that now we can get to this. You can clearly see that this is the previous candle high, and it's taken out. So all right, I mean that's the high that confirms the valid pullback, but I am interested in this one here, this high, because it needs to be the previous candle high. So you can clearly see this red candle did that. So this means that this red candle confirms a valid pullback, I mean a valid order block, because it is also associated with a fair value gap, just like you can clearly see right here. You can see this here is the fair value gap. I said the size of the fair value gap does not matter. So this means in our trading range, all right, take note that this order block here is not valid. This order block here is mitigated. It's just that that order block is mitigated. So in our trading range, we only have how many order block? The first, this one here is not valid. So let me change the color to purple. And also this other one, let me change the color to purple. All right, so exactly right here, you can clearly see now we are left with these two supply zone, or in that case bearish order blocks. And now since there are only two, we say there can only be a maximum of two valid POIs. In that case, in our case here, it's obviously the order blocks, and we can clearly see that this order block is not mitigated, and it is the one on the extreme, and the other one that comes immediately after the inducement is taken out. We can clearly see where our inducement is. So the inducement is taken out. This one here is the supply zone, and so this is the decisional one, and this decisional comes before the equilibrium, so that doesn't matter anyway. We said even if it comes before the 50%, or even if it comes before the, this is the premium, we actually don't consider that, so it still counts to be valid. Right, so right now let me, all right, first this is a POI, so I need to shift to the lower time frame. In that case, let me shift to the 3 minute. The 3 minute does not give me any message. Let's say the 1 minute, even the 1 minute. All right, anyway, let me continue running price and see if there is some reversal from this end. Right, so exactly right there, you can clearly see the reversal, and right, you can clearly see price didn't made it out to this, because the break was supposed to be here. You can clearly see that this here was now the valid break. Let me change this color to something like blue. You can clearly see that price of blue is not a great color here. Let me change it to this color. Yeah, you can clearly see that price didn't come all the way breaking past that end. So this means our decisional POI failed, and of course, if it fails, where are we looking forward for the other reversal? All right, the engineering liquidity. Yeah, I can clearly see that this pullback, we said that the engineering liquidity is the liquidity resting above the valid pullback right before the extreme POI. In our case, it's a order block. And we can clearly see here there is no any other valid pullback except this one here. So this one here is the valid pullback right before the extreme POI. So the valid pullback high, there is a buy side liquidity resting there. That buy side liquidity is what we usually call the engineering liquidity. And like I said when I was explaining about engineering liquidity, I said that the engineering liquidity is a core liquidity, just like inducement. A sweep from it, I mean a valid sweep from it, confirms a complete reversal towards the external liquidity. So let me continue running price. Probably price may react from that, we don't know. Right, so you can clearly see price did that, but it gave a simple reaction here, which of course it didn't made the ultimate reversal. You can see price closed above our sweeping high, but now we still need to shift to the lower time frame so that we can confirm that, and we can clearly see that price made, of course, a change of character here. You can see that's the change of character, but there was no any inducement here. All right, there was an inducement, but a minor inducement exactly right here. So that was the change of character, and this one here was the minor inducement. So we usually don't I usually don't like trades that involve the minor inducement. So in this case, I would have waited for price to break past this end, so that, all right, let me use this. All right, let me just use this one. Here's my cursor. All right, so right here, if this here is involving the minor inducement, I would wait for price to do something like this, create an inducement, then price mitigating my POI here, then my sell will be from their end. So wait for a break of structure. This second break of structure gives you a clear context that price is now completely reversing, because you can see this first reversal, it's involving this minor inducement. At least price would have created another valid pullback here, creating a major inducement. At least this will give me a confidence from selling from this side. Yeah, so anyway, someone else wouldn't have seen that and probably would have taken the entry from there, and you can see would have been stopped out. So that would be his or her first stop out. So that's something also to take note. Anyway, if you had to take a direct entry, of course I wouldn't expect you to take a loss from the higher time frame, because on the higher time frame there was no much of information. You can clearly see that Price, yes, swept that engineering liquidity, but this candle does not give you a clear or a good momentum for you to continue bearish. So you can see things like that. At least I would have waited for a bearish candle, or with that bearish candle on the lower time frame would have created that second break of structure that will give me that confidence that we now need to sell towards the external liquidity. But anyways, the engineering liquidity sweep has also failed, and now I'm only left with this zone, or maybe price can decide to also take a reversal from this rejection block, I mean this end. So this also, there is some possibility that price can also do something like this. So yeah, let me continue running price. Right, so let me make it fast. I said I'm not interested with anything that price have, like price does before mitigating. Right. If your mic is on, thank you. All right, so exactly right here we can clearly see that price is making these reversals, and I know like someone else will get that will get swayed by price or by what price is doing, and he or she may shift towards the lower time frame so that he can get that move all the way, because he's seeing this complete reversal, and he's like that price will now continue. But you can clearly see that there is no interaction of a POI in this case. So just wait for price to mitigate your higher time frame POI before you actually reverse back into the lower time frame, or before you shift into the lower time frame. So that's our POI, and of course this one here is our final POI, which is the rejection block. And price rarely gets into the rejection block. It usually takes the reaction from the extreme order block. All right, so let me continue, and exactly right there you can clearly see price mitigated the extreme order block. All right, let me get rid of this one. You can clearly see on the premium, and for someone who takes these direct entries, probably this one here will be his or her entry, stop loss above there, and of course targeting that external liquidity for someone who's taking a direct entry. But since in today's session we are about to, or we are learning, or we are discussing, or we are actually exploring the lower time frame execution or top down analysis, then we will need to shift to the 3-minute. And exactly right here we can clearly see that this is the case. Even on the 5-minute or so, you can see the same. The end is this one. What about on the 1-minute? In the 1-minute also, we can clearly see that this one here is the major inducement. So both time frames provide the same node, like the same major inducement. But for me, obviously, I would prefer a time frame that will give me less noise, because if I use the 1-minute, it will give me like a lot of noise at this place, and I want to just, you know, so I will need to shift at least the 3-minute. Will give me now you can see now the price is a little bit clear, rather than on the 1-minute where there is a lot of candles representing the same context that price is actually presenting using the candlesticks. All right, so where is the major inducement, or where is the one that we are supposed to take the change? In this case, then I don't see any need of actually marking the current trading range, of which you can. Of course, you can clearly see that this one is the inducement, and this one is a break of structure. Right, so price took out the inducement here, break of structure, but there is no any inducement here. So inducement, of course, it is the trading range low, of which now it is a major inducement. So we have gotten the context now. We have marked all of that, and we can confirm that this one is our major inducement. So this one here is the order block. In this case, it is not an order block that will hold. The first thing, this is the major inducement. There is no any inducement here. The second thing, we have mitigated the high time frame POI. So this means that the high time frame POI is stronger, and we all know that the high time frame POI outweighs the lower time frame POI. So this means that this POI will not hold even if price has given this beautiful reversal rejection. All right, so let's see. All right, this is the 15-minute. I need to change this to the 3-minute. so that we can get price to move as we want it. So you can see that reaction, but all right, so price hold. You can clearly see price gave the reaction, which is fine. Price did that. I mean, price set that high, and where is now our low? This is our low because price price has yet taken out a major inducement here. So this means that this one here is just the major inducement currently, and this one here is just a sweep of our high. So let's continue running price and see what price does. Alright, so we can clearly see that price created another high here. So this means that I'll be shifting to this one here. If you clearly remember that what we were talking about inducement, we usually shift to the recent one. So this one here is our inducement. Why inducement? Because we have not taken out any low. You can clearly see we have not taken out any low. Price has yet taken out any low. This one here, price has yet taken out any low. So this one here is our major inducement. And if price creates another one also, we'll be shifting to the next. So let's see. Alright, price has mitigated our rejection block, so there was no any reaction from the extreme order block. I mean, there was some reaction, but price didn't confirm that. So you can see if at least you would have, at least if you had shifted to the lower time frame, you would not get this stop out, because I said if you were on the higher time frame, probably you would see this reaction, and this reaction may create a good reversal pattern, and probably will have entered in that trade, and of course your stop loss above that reversal pattern. You can see you got your first stop out. But if you had been conservative, maybe on the higher time frame, taking that reversal pattern and placing your stop loss above this rejection block, at least you will still have some hopes that price may keep on reversing. After all, price has made it out to the external, I mean to the rejection block, of which it is our final POI on this trading range. All right, anyways, let me continue running price. And right, so there is some possibility that this one here is our high, and price may not end up breaking past this high. So anyway, let's see. All right, the high was this one here. So let me continue running price and see if price breaks past this high, or price continues to the downside all the way breaking past this low. All right, so let me continue running price. Let's make it fast. Right, so you can clearly see that there is an order block here. I mean, this is an order flow on overall. This is an order flow. So I think I'll just use this order flow, of which now it should not hold. I'm not expecting it to hold. So right, it gave the reaction there, but then later you can see price, finally price made that break of structure to the downside. So this is where now our change of character comes in play. So you can see that all right, so let me zoom, and also let me make this line to be 1px instead of 2px. Let me make it 1px. Yeah, so you can clearly see that this line, price has yet break, like price has yet, this low didn't broke past this line, and this here is the break. So this means that this here is our minor inducement. So exactly right here, that's our minor inducement. Right, so exactly right there, that's our minor inducement. And yeah, so before our inducement is taken out, we cannot do anything. So let's see. So you can see price has created a major inducement here. Price has created a major inducement. So let's see. All right, price has taken out that major inducement. So let's mark our POIs. Anyways, this one here is our low. And if I am to mark the POIs, of course, there is no any order flows here. so only order blocks, and I will just be marking them real quick. So if you I want to believe that you have been practicing and you can just identify them like with your naked eyes. So I have this one which is already mitigated here. So this means that that's an invalid one. So I'll be shifting to this next one, which is right. So there's this one, and all right. So I'll be sticking with this, and this one here, which is all right. So let me see. Let me see where price is reversing from. All right. So price made it out to breaking the structure without actually mitigating any POI. So that still happens. So you can clearly see that price took out our major inducement and made that break of structure. So this confirms that that's a major inducement. So this one here is our high. So we are currently in a new trading range, and
Market has the price mitigate the recent order flow after the major inducement.
right. So if this here you are saying that this one here is the order flow, then
Yeah, last buying before sell.
right. So that's the order flow. But you can clearly see that if I check on this side, you can clearly see that this here is the whole buying move. I mean, from this side, you can see that's the whole buying move. So you can see the buying move was mitigated here. So in that case, that cannot be an order flow. And in this case, we will only be looking for the order blocks.
Okay.
Right, so exactly right here. So we are currently in a new trading range. And right, so price has created this inducement. This is our high. Take note on that. Let me reduce the speed of these candles. So price has created an inducement here again. Price has taken out that inducement. This one here is our extreme POI, I mean extreme order block. You can clearly see that that's our order block here. Yeah, that's our order block. There is no any order flow here. The order flow here was mitigated. So let's see. Alright, so you can clearly see price has mitigated our order block exactly right there. And this one here, price has yet broke past this low. So this means that the sell was supposed to be exactly right there. In this case, I don't even know if price clearly mitigated the zone. I think somewhere near there. And then, of course, we'll be targeting your external liquidity, this end here. So that's the first sell. So let's see if price is actually right. So price made that break of structure to the downside exactly right here. Yeah, of course that's the break. I think I'll be using these brushes so that I can go faster. So you can see that this one here is the break of structure, and there's no any inducement at the moment. So let me see. Exactly. Now I've created the inducement. This one here is the inducement. And where is our order block? Our order block, of course, is this one here. So that's our order block. And I'll take this entry to this side somewhere here. Let me do that. So yeah, so let me continue running price. Right, so price, you can see price has yet made it out to the order block yet. Price is reversing from this fair value gap. So you can see same scenario. Let me do this on this. Let me get rid of this, and the levels. So if I am to pick the fib, you can clearly see price is reacting from this, because even in this side price just fully filled this fair value gap and gave the reaction. Same here, you can see price made it out to this fair value gap. In fact, this is you can see like I will call this an inverse. So there is a fair value gap at this end and another fair value gap at this end. This is what we call the balanced price range. So the BPR, what ICT traders call that. So, but we usually don't consider these things. I usually consider the order blocks and the order flows. So exactly right there. So you can see this here would have been a missed entry because the entry would have been somewhere there, and stop loss of course at that end, because this one here is a major inducement, and of course we'll be targeting that low. But in this case, in our case, this is a missed entry. Or anyway, let's see if price mitigates. Oh, that's great. You can see price mitigated our entry here. So this means that's a great one. Of course, price, the stop loss will be above here, and of course we'll be targeting this low. And this is where now insane risk to rewards come in play. Actually, you can see how you can see the risk to reward. Oh, that's crazy. 1:19, rare to find. Anyway, you can clearly see price made the break. Let's see. Yeah, exactly right here. Price made the break of structure to the downside. So let's see if price makes another. Yeah, exactly. This is what we call the inducement. So let's see. All right, let me do this so that you can clearly see the. And by the way, our trading range high is this one here. So let's see. All right, price has taken out our inducement. In fact, that's not the inducement. This one here is the inducement, and this one here is our trading range high. And in this case, I'm only interested with the order flow because there is some order flow that is not mitigated here. So you can clearly see that all of this here was the order flow starting from that end. Or right, no, that's not the order flow that I was talking about. This one here is the order flow. You can see that there is the valid pullback here. So that was the order flow of which it was mitigated here. So I'll be shifting to this order flow of which is already mitigated too. So I'll be shifting to the next order flow, which is this one here, which is this one. See this? That's the order flow. And the high. Right, so of course you'll be setting your limit order exactly right there. Stop loss above this high, because we are involving a major inducement. Then of course your stop loss will be on that low, or if you are willing to use a fixed risk reward, then you can do that. So of course your stop loss, I mean your take profit, will be from this will be at this low. So you can see the risk to reward not bad. That's a 4.5. That's good because the stop loss is also good. Alright, so price didn't made it out to this area. We said once we make a new trading range, this POI becomes invalid. Those are just future reaction points, and we usually don't consider that. Anyway, the reversal actually was after this we call this the engineering liquidity. Actually, this here was the engineering liquidity. If you clearly remember, let me first do this. You can see this here was our extreme order flow, and the POI that comes before this order flow is of course this one here. So price reacted from the extreme order, they swept the engineering liquidity. So in this case, the reaction was supposed to be somewhere here, and stop loss of course above that sweep. You cannot place your stop loss above that high, even though it's the safest option, but I think that's not a reasonable SL. So I think this here can apply, because you can see that price has taken out the inducement and has swept that. If you get stopped out, of course you will get your entry of course at the extreme POI. So and you'll still be featuring a good risk reward, so the stop out will be worth it. Right, so let me continue running price. We are currently in a new trading range with this one here being a breakout structure. So let's see what price does after that. Alright, so price created this, and we can clearly see that there is no any pullback that price has taken there. Right, so price created another valid pullback here. So this means that's our inducement, and this one here is our engineering liquidity. So I'll not be deducting that. Let me do this. Alright, so where is our high? Of course, our high is that end. Let me see. So price has taken out the inducement, and in this case, this is a sweep. You can clearly see. Let me get rid of this one. You can clearly see that this one here is a sweep of the inducement. So that's the sweep of the inducement, and this sweep you can clearly, alright, this here is not a strong one because this long wick rejection candle closed bullish, and it needs to close bearish so that it can be a strong rejection. So I want this candle to close bearish for me to get that sweep correct, or to get that sweep valid. Alright, so exactly you can see price closed bearish on this end. So if I get the stop out here, it will be worth it because the risk to reward that I'll be getting off this trade is actually a huge risk to reward. So you can clearly see that I'll be aiming this low here. You can clearly see the risk to reward on this part. It's very reasonable, that is 11. If I get stop out, the trade that I'll be getting here after the mitigation of either the extreme POI or the sweep of this here is still a good trade, right? So all right, let me make it fast. All right, you can clearly see the trade played out good. So let's see. All right, I got stopped out, and this one here was our major inducement. So right now I will not do anything until price actually makes a break. I mean, price makes a change of character. Alright, so price does that, and later price makes that change of character to the downside. You can clearly see exactly right there. So this here is the change of character, and that's where now I'll be looking for the sales again. So that's the change of character, and where is the inducement? That's there, the inducement. It's here. You can see that's where the inducement is, and of course this means that I will be getting my sell out of this end. So let me do this. This here was a stop loss, I mean was a stop, yeah, we lost that trade. All right, so let's see. All right, price has taken out that one. Remember that the high of this one here is actually a major inducement high. So if price sweeps this high, then I'll be confirming that this one here is a sweep of the major inducement, and I can take the entry. And at the same time, you can clearly see that this is the extreme POI, but you can see that I have been mitigated here, so I wouldn't be interested for a sell here from this extreme POI, but unless I place my stop loss some few pips above here, but still I'm not interested in doing that because that will give me a low risk to reward. So I will be waiting for a sweep of this high, or just no trade and wait for the break. And you can clearly see price is actually heading down, so this means that was no trade on my side, and exactly there, that's the break. So this confirms me a new trading range right here, a new trading range. And where is the high? Of course the high is this one. So let me continue running price. Right, so price has made this what we call the major inducement. So this, now you can see this trade is now getting Right, so price has taken out the minor inducement, and this is what we call the decisional. After all, this is the extreme. You can see that this is the extreme, and this one here is what we call the decisional, of which the fair value gap is not fully mitigated, and this one here is what we call the engineering liquidity. So yeah, this here is what we call the engineering liquidity. There is a pullback here right before the extreme POI. Yeah, that is what we call the engineering liquidity. Alright, so let me see. This is the decisional. So this means if I get a good reversal here, I can take the entry directly, or I can just take my stop loss above here. So let's see. If let's say this is this on the discount or the premium, right? That's the equilibrium. That's not bad. Alright, let's see. Exactly right here, you can see this. So that's a good reversal sign. The best stop loss is of course at this high, but you can place it there if you want that aggressive risk to reward, of course, and you'll be targeting at this end just like the others. So exactly right here, you can clearly see. So let's see what price does. Alright, price does that, but remember the safer stop loss is here, because price can literally just not create minor inducement, can create a minor inducement on the range, and this trading range high can now be the major inducement, and price may actually reverse back and take that high. So that's the reason as to why making that that stop loss big is obviously a good idea. So this one here, you can see that the break obstructed the downside, and this one is our high, and where is the right? This is a major inducement. So after the break, you can clearly see this is a major inducement. Right, if you don't see the screen, maybe I can do something like this. Yep, yeah, I think something like that would be better. And let's see what price does. Price has taken out the major inducement. This one here is what we call the extreme POI. Alright, is the extreme POI mitigated? Let me zoom in so that you guys can clearly see the extreme POI, the one that I'm talking about. This one here. Yeah, you can see that it's dealt with, that price has already mitigated this, or has fully filled that fair value gap, and I will be looking forward for this next one. Yep, so that one, or maybe there is a order flow in this case. Yeah, you can see all of this is an order flow, by the way. This one here is the order flow, and it's not mitigated. So this gives me the confidence to sell from this part. Stop loss, of course, at this high, because this one here is a major inducement, and target profit, of course, at this end. Alright, so this will give me a 5, I guess. You can see, I will just need to extend from, yeah, so that will give me a 5. Let's see what price does. Alright, price mitigated that order block that I marked, and this is not giving me good sign, because price needs to actually reject from that price very badly. Alright, let's see. Alright, price stopped me out, took out this high, probably this one here on the 5 minutes. So you can clearly see on the 5 minutes there was no any POI here, and this high was what we call the major inducement. So you can see price swept that major inducement. So this clearly says that in this case you should actually place your stop loss above this, and of course in this side also we would have saved on this trade if we had used the 5 minute. You can see price taking that high, and this one here is not a valid pullback, so this here was the engineering liquidity, and price has mitigated that POI, so this here will be the entry towards the downside. So you can see actually checking that's the reason as to why using both the 3 and the 5 minute, it actually depends with the structure of the 15 minute, how big the structure is. Maybe that structure was aligning with the H1. So in that case, then I thought that the 5 minute in that case will be the greatest entry, because if the 15 minute structure is maintaining, like it's actually the same as the 1 hour, then this makes sense for you actually using the 5 minute as the lower time frame. But if they don't resemble, I mean the 15-minute trading range and the 1 hour trading range, they're not the same, then in that case you'll be using the 3 minute and the 1 minute. But if the 15-minute trading range is the same as the 1 hour trading range, then in that case it's actually recommended to use the 5 minute, or you can just be mixing the 5 minute and the 3 minute. But good, obviously, the higher time frame, because the higher time frame weighs much than the lower time frame. And in this case, if you're using the 5 minute, clearly you can clearly see that this trade, you will need to be stopped out. After all, if I go to the 1 hour, I can clearly see that this is actually aligning. You can clearly see that on our higher time frame, price has taken out this high. So this high is what we call and by the way, this is the 1 hour. So you can see that high that price took is the major inducement on the 1 hour, and you can clearly see price retraced with a good number of candles, took out that high and make that break of structure. So this means after the mitigation of my POI, if I had used the 5 minute, it wouldn't be a problem, because the structure or the trading range is actually aligning with the 15 minute. And in this case, I would recommend you to actually use the 5 minute, because the 5 minute is the higher time frame compared to the 3 minute, and obviously the higher time frame, the more weight to the price it actually gives. Right. So anyway, since we were using the 3 minute in that case, you can see it was a stop out. But if we were using the 5 minute in this case, we would have saved ourselves that stop out, and in fact this would have been a great entry, especially after the closure of this candle. You can see this here was a sweep of that high. So if this candle closes, you can see it's closing actually with good momentum. So let's see. All right, you can see price actually skyrocketing after taking out the major inducement, and probably price may end up getting into this external liquidity. I mean the higher time frame external liquidity. All right, exactly right there. You can see price made it out to the external liquidity. So things like that you actually need to check and see how you may apply that. But actually, you can clearly see that the top-down analysis is actually simple. The glitch comes on after the mitigation of the POI. Just check out the change of character. Then after that, just trade normally and make sure that where you set your sell, it's actually the conservative area, or it's actually the safe area, so that you make sure that you don't get much like you don't get stop hunted like that fast. Yeah. And you can see the staking of your cells pretty good on this one trading range. Of course, you cannot be taking all of these entries, because maybe the time when this entry was happening you were sleeping, and the time that this entry was happening, that's when now you are waking up and actually seeing that entry, and that's when now you can actually capitalize on it. So things like that also do matter and stuff, but at least you have gotten the clear picture of how to do it, and you can do it on any other time frame, because it's actually the same thing. It's just that in this case it was a higher time frame. I mean extreme POI. On our previous section it was the inducement sweep. Probably on the next session I may get an engineering liquidity sweep, but it's actually the same as the inducement one. And of course for the decisional it will also be the same as the one that I've showcased here. So guys, this here was the top-down analysis, and in today's session I will be ending it here.